One of the things I'll be doing today is to simply show you how to join a reversal market or how to join a continuation market. I'm going to be using a live trade example on GBPUSD that I took last week, and also I'm going to show you how I'm going to join the new trade this very week if price open tomorrow, being Monday. But before we go into that, if you see me for the very first time, my name is Divine. What I do here is document how I trade and make videos that improve how you approach trading. If you want to be synchronous like this video, subscribe and drop a comment. I'll be right back. I'm not going to continue with this sell if price open tomorrow being Monday. I'm going to show you why, and I'm going to show you the new setup in this very video. This pair is GBPUSD. The very first thing we want to confirm before we take any setup is to understand the overall direction of the market. And in this case, I'm going to clear this chart entirely. And what we want to be doing is simply understand the overall direction on daily time frame. That daily time frame tells us where price is coming from and where price is going to. And there's only two things that I want to do on this daily time frame. First is to simply understand the support and the resistance. And secondly is to understand the key level. In this case here, for us to simply understand the support and resistance, we have to zoom in, which I have already zoomed in. Now, because I've zoomed in, here becomes our support. As you can see, one touch, two touch, three touch, four, and even five touches on this particular trend. So it's a very valid what? Support. Now, for every support, there is always a resistance. In this case, here becomes the resistance, right? This is the resistance. And as you can see, one, two, three, four resistance, meaning this is a very valid resistance. Now, we want to simply interpret what the support and the resistance is saying. And at every point price gets to resistance, price tends to go to the what? Support. And if price gets to support, price tends to what? Go towards resistance. In this case, price is currently at the resistance, meaning there's tendencies for price to go to what? Support. But for us to confirm that tendencies, we want to simply identify the what? Key levels. In this case, the last point price got to on the levels is simply the key levels. In this case, this is the support key level and this is the resistance key level. Our interest now is simply on these key levels. And what we want to do with these key levels is to simply understand the market structure that was created on these key levels. How the price move from one key level to the next key level. And the only time frame we can do that is simply 4 hours time frame. But the thing is this, on the 4 hours time frame, we are looking for the market structure and also the supply or the demand zone. Now let's first of all identify the market structure. How the price move from this low to this high. In this case, we clearly see that price simply gave us a what? A swing low here, and this swing low gave us this swing high, and this swing high gave us this swing low that gave us what? This swing high. Our interest is simply on the last high and on the last low. In this case, the key level is already acting as the what? The last high, and here is going to be the last low. Remember, we want to identify two things: the market structure and the supply and demand zone. Now, where do we identify the supply and demand zone from? We want to simply identify the supply and demand zone from this last low and this last high. In this case, where is the demand zone? The first point we can identify a demand zone is simply at this level here. This is the first what? Demand zone. And again, there's also a demand zone here. That means in this whole structure, we are able to identify two demand zones. And because we have identified the reason why we came to the 4 hours time frame, we are simply going to go to the what? 1 hour time frame and refine these demand zones to become a point of interest and identify the liquidity. What this means is this, that on the 1 hour time frame, we are looking for two things. The first is simply to refine the demand zone to become a point of interest, and secondly is to identify the liquidity. In this case, if we are to identify the first demand zone, it becomes this, right? Here becomes the point of interest. Here becomes the point of interest for the first demand zone that we identified. And if we are to refine the second one, here becomes the point of interest, right? This is the point of interest, and here is the point of interest. That means we have refined this particular demand zone to become a point of interest. Now, the second thing becomes to identify liquidity. That for every POI that you see, there has to be a liquidity that will tell you that this POI is going to hold. In this case, there's a liquidity here, and here becomes liquidity. And in this case here, there's also liquidity at this point here. That means most likely this place is going to hold. Our interest now is simply to see how we can join price to where price is going to, because clearly we can see that price is simply reacting from a what? A point of interest. Now for us to know how we're going to join the POI, we're simply going to see how price move from the key level to the POI and how price is reacting from the what? The POI. And this has to be on the 15 minutes time frame. That on the 15 minutes time frame, we are simply going to be identifying three things. The first is simply how price move from the high to the point of interest, and how price is reacting from the what? Point of interest. Right? This is how we're going to do it. How the price move from this particular point to this point, and how is price move from this point to the current point price is. In this case, we are identifying only three things. The first is the swing high and the swing low. Second is the point of interest, and thirdly is the liquidity. In this case, how the price move from this particular high to this low here. If you look closely, you will see that if price was going to continue an uptrend, this point would have been a point to trigger an uptrend. But instead, it failed because this place has a point of interest, here has a liquidity, and here most likely is a structure. But in this case, what happened? Price came into the point of interest, reacted, and failed. When it failed, it caused a change of character. That means here becomes a change of character, and when price eventually took out this particular low here, it becomes a break of structure. What this means is this: since price gave us a break of structure, here become a strong high, and most likely wherever price gets to is now the weak low, which means here most likely is acting as a weak low. That from this point to this point is simply one long movement, because price did not give us a reasonable retracement since price took out this particular low, or since price gave us a what? A change of character. What this means that this point becomes an incomplete pullback or an inducement. Now if we are to continue, sorry for that. Now if we are to continue the sell, the first point you'll be looking at for a sell is simply going to be here, right? This point here, because this is simply acting as a swing high. Here is a swing low. Here is simply a liquidity, and you can see price is reacting from this point of interest. Hence the reason why I took that particular sell that I identified earlier on. From here, my take profit would have been here, and here would have been my stop loss. But here becomes the reason why I won't take this trade again. That had it been price simply took out this particular low on Friday, then I would have confirmed here to be a strong high and here a weak low. But because price did not do that, here is acting as a weak low and here is still acting as a strong high. That For us to continue a buy or for us to confirm a buy, price will have to take out this particular high that is here. And now because price did not take out this particular low here, there's tendencies that price is simply going to buy to the upside for price to continue the overall sell. In this case, all of this place is acting as a liquidity. These are liquidity, and this place is simply a swing high, and this is the swing low. And between this swing high and this swing low, there's also a POI here. That this POI here most likely can trigger a sell. Hence, my entry is going to be to take a sell from here. My stop loss right at this point here, my take profits at this high, at this low here. Sorry, at this low here. This is going to be a good entry for a sell. And the reason is because all of this place is going to be a liquidity to hold at this POI to continue the sell. However, if price open tomorrow being Monday, I'm going to be looking for a buy opportunity. Why? Because here is acting as a low, and this place here most likely acting as a high. That there can be an opportunity if you're able to identify a good POI from this particular low and this high. And where I can see a good POI is simply here. This is a good POI here. And most likely there's also liquidity. That means this is a valid entry with our strategy. And most likely, if price open tomorrow being Monday, I'm going to be looking for a short-term buy from here. My stop loss 25 pips. My TP1 here is TP1, and most likely this POI is my full TP for a 1:3 risk to reward. This will be my first trade for the week. That'll be all for this very video. I will see you in the next one. Peace.